All attendees are in listen-only mode.
Good evening, everyone. My name is Troy Zerveskis. I have my partner Rich Sentnor on the phone this evening. We're from Advisory Resource Group, so we're a financial planning advisory firm that works pretty much exclusively with physicians, med students, residents, and we're going to chat tonight about disability insurance. So talking about sort of who we are, our focus is working with residents and physicians, really from residents all the way to retirement. We work with clients all around the United States. We've been working with Tufts for, geez, I want to say this was our, excuse me, 12th or 13th year speaking with Tufts this year. Also work with a number of residency programs, medical schools around town. And we work as part of a team. Rich, do you want to introduce yourself?
Yeah, good evening, everyone. So just as a couple of, my name is Rich Sentnor. I'm one of the advisors in Advisory Resource Group, and you know, Troy and I are going to spend some time with a small group like this. We welcome questions for you guys, just as some admin. You guys are all muted right now, but we can certainly, you have the ability to raise your hand on the webinar or type in a question, which we will certainly be able to utilize those features to ask specific questions to your situation, and we'll also be able to leave some time at the end for that as well.
Yeah, absolutely. And in any of these events, they're always, you know, they're always best if people are engaged and asking questions. And I'm sure if you're thinking of something, excuse me, someone else in the line probably is as well. So, all right, awesome. Well, let's go ahead and get started. Oops. So our goals this evening are to first understand the basics of disability insurance, highlight the differences between group and individual coverage, determine the right amount of coverage for you and how to begin sort of thinking about those things, taking advantage of special programs either through the school or those that are available individually, which we'll spend a little more time talking about, and really when is the optimal time to apply for disability coverage. Rich, do you want to jump in from here?
Sure. So when we're talking about disability insurance in its basic form, disability insurance basically provides you an income if you're sick or hurt and you cannot work. Basically, think of it as a lot of times it's called income replacement. So if you are working as a resident or as an attending physician and you become sick or injured and you're no longer able to perform the tasks of your job, then at some point you're going to go on to disability insurance. You're not going to be paid as an employee anymore. You're going to collect disability insurance, and making sure that you have the right amount and the proper coverage that's going to kick in for you and pay you enough to replace your income is critically important, and one of the things that we're going to spend some time on. So this is critical for certain professions, mostly professionals, business owners, physicians specifically, anybody that isn't part of a you know, a huge corporation that has, you know, extensive group coverage, or, you know, you're at a position where you're not doing a skilled professional job where it's a blanket, you know, coverage of everything is going to be able to cover for you. It's critical for anyone with a skilled specialty, and especially a business owner, to make sure that they have the proper coverage in place.
Oops. So, you know, as we talk about, you know, what's our biggest asset, I'll, you know, ask clients this sometimes, and, you know, the first thing they'll come out and say is, you know, their house if they have one, or maybe their car. But really the reality is it's their ability to earn an income. So if, you know, if you look at what some of your potential incomes will be and you multiply that over, you know, the number of years in your career, you can start to get a sense of how large that number is. You know, sometimes in our sessions we'll ask people, you know, what do you have to show for your, you know, for all of your hard work and your training? And everyone will kind of look at me with sort of a puzzled face. And what I'll always say is you know, you have this golden head, if you will. You have your education and all the work that you've done so far to get you to this point. But the only way that we're able to make good on that is to be able to practice our craft and continue on. And the only thing that really allows us to truly protect that is disability insurance. You know, it's one of those things when, you know, you are a professional, we're not necessarily investing in a business, maybe, but not necessarily. It's really just that ability to be able to go out and continue to work to create that income.
And these, if you just flip back to that real quick, and these numbers are pretty, outdated, even that, when you look at them. And what I kind of tell people all the time is, you can't drive a car unless you have automobile insurance. It's required by law. You can't buy a house unless you have homeowners insurance. But those assets are going to pale in comparison to the amount of total income, which is going to be a much bigger asset. But you can go your whole life. It's not required to have it. It's just a very poor financial decision to not protect your ability to earn income, which is going to be an asset that's 10, 20, 30 times larger than anything else that you ever purchase.
That's right. Absolutely. Do you want to talk a little bit about this, Rich?
Yeah, so own occupation protection. So when it comes down to it, the nuts and bolts of it, and we'll go through a lot of specifics, but the key component when you're dealing with a physician is what we call the definition of disability. And for anyone that's kind of scratched the surface or dug into this a little bit, it's what we call own occupation or true ONOC. And it's the definition of being totally disabled. The definition that you want as a physician, that all the physicians covered, is what's called the true own occupation definition. And it basically says that because of a sickness or injury, you are not able to perform the material and substantial duties of your occupation and therefore will be considered disabled, which is vastly different than just a standard definition or kind of the base, governmental Social Security definition, which basically says because of sickness or injury, you're not able to perform the material and substantial duties of your occupation or any occupation for which you are suited based on education and training, which opens up an entire new world of, well, you can't be a doctor, but you can still be XYZ, therefore you don't qualify for it.
That's right.
Your disability coverage.
So essentially, Sorry, I was going to say, so essentially what this means is you're protected in your specialty again. So if you're a surgeon and your income is comprised of even, let's say, one procedure, that procedure makes up 80% of your income, and you're not able to do that procedure, and that has an impact, then you're considered to be disabled. And they can't tell you, well, because you can't do that procedure, then you need to go work in internal medicine. Again, if you can't do that, if you're not able to practice that specialty, then you're considered to be disabled.
Yeah, and the true own occupation coverage will allow you to go back to work in some other capacity, even if that capacity is still in the medical field. Troy's example, you're a surgeon, you do nerve damage to your hand and you can't perform surgery anymore, but you can still be a psychiatrist, or you can still run the practice, but not actually be able to earn the income of doing the procedures. A true own occupation coverage will allow you to do that, earn income there, and still collect your benefit, which is what is truly most important to most of the physicians that we work with.
Absolutely. So another thing we have on here is the occupation engaged in at the time of disability begins. People say, well, what if I change my specialty? What if I'm doing something different throughout my career? The example that I give is, if you're a high-powered attorney in New York making $1 million a year, and you have a midlife crisis and you decide to be a bungee jumping instructor, if you can't do the duties of a bungee jumping instructor, then you're disabled and you'll get those benefits that you would have applied for originally as that high-powered attorney making $1 million a year. So basically, it's at the time that you apply for disability that makes the difference in terms of getting the coverage, but once you have it, it's based on whatever it is at the time of disability begins that determines your actual disability. So if you were to change specialty, that's perfectly okay. This coverage, if designed correctly, is going to follow you, and it's, again, at the time of disability. Good. Anything else that you'd add there, Rich?
Nope, I think that's good. So when it comes to designing the coverage of disability, that's obviously the number one thing when we talk about individual disability coverage, and we'll talk in a little bit on a couple of slides about the differences between the types of coverages, but there are a lot of other additional benefits that are kind of a must for us when we talk to our clients and especially younger physicians that should be included on this. And the three there in the parentheses there are kind of the most important. The COLA, which stands for the Cost of Living Adjustment Rider, which is basically a rider that allows your policy to keep up with inflation. As a 25, 26, 27-year-old resident or young physician, if you get injured or sick early on in your career, you have the potential to be on claim for 30, 35 years, all the way up to age 65, 67, 70, whatever the case may be. The impact of inflation on you is going to be tremendous. You know, what $3 buys us today is not going to buy us 20 years from now. The price of milk, gas, rent, everything else is constantly going up. And what the COLA rider allows is for you to keep up with that inflation. It will give you an automatic raise on your disability benefit every year that you're on claim. So hugely important. Residual is synonymous with partial disability. With the residual, it allows you to be partially disabled. What I like to tell people that are looking into this, without that, it's an all or nothing. You're either totally disabled or you're not disabled at all. There's no middle ground. There's no gray area. 15 years that I've been doing this, I don't think I've ever written a disability policy without the residual rider on there, because the majority of claims are usually going to have some sort of partial disability rider or residual rider on there. And then the total, the future purchase option, especially for the younger physicians, is basically allowing you to increase your coverage in the future without having to qualify for it medically again. So once you've applied for it, you've gotten it, it's yours, and then you can increase it in the future, and they'll never ask you another medical question. This is very important for a lot of physicians, because as you know, as we get older, we get less healthy, not more healthy usually. And excuse me, this allows you to be able to lock in your health at a current young age.
So quick question that we have on the phone here is that, if somebody is over 40, does that impact their situation and how they might apply for this coverage? At the end of the day, when it comes to disability insurance, the question that we have to ask of, do we need this coverage, is really, can we retire? Are we financially independent? If the answer is no, then we still need disability coverage. If we can say, yes, we are financially independent, that's really the first point at which, I'd say would have a conversation with our clients to say that we might not need the coverage. But even in those situations, oftentimes if people can, they still determine that they want to insure that risk because it's cheaper to do that than it might be to use their own assets. So, but to answer your question, no, it really doesn't matter. Even if you were 50 years old, let's say, and getting started, it all depends on if you're financially independent or not.
Yeah, I mean, the only thing that's really going to change with regard to that is the cost of the coverage and your ability to get it. So the older you are, it's priced according to your age, your sex, your health, and your occupation. So that will play into it. But as Troy said, the fundamentals of getting it and what you should be getting are the same if you're a 30-year-old resident or a 50-year-old resident.
Right. Did you speak about non-cancelable guaranteed renewable yet, Rich?
I have not.
You're not? Okay. So sorry, go ahead.
No, go for it. Go ahead.
I was going to say, so non-cancelable and guaranteed renewable is an important provision when we're designing these policies. And basically what it means is that the company's not able to change the provisions or the cost of the policy going forward. So if you lock that policy in today, you know that for the duration of your career, they can never come back to you and say, again, we don't like surgeons or we don't like, OBGYN. It doesn't make a difference. At the end of the day, once you have that coverage, it's locked in both provisionally and cost-wise.
Yeah, I always like to tell my clients basically what it means is it's yours, you own it, you can take it with you anywhere that you go. So you leave Massachusetts and you go, do a fellowship in Texas, and then you leave Texas and you go become an attending in California. That policy travels with you. Think of it as just yours. It's tucked away in your back pocket and it's there for you. And as long as you continue to pay your premiums, then they can never cancel it or take it away from you, and they can't change the terms of it. So it's yours and you own it.
Right. So company being relevant in the medical market is really just speaking to the fact that there's only a handful of companies that are really doing the job that they need to do and really provide the coverage that's appropriate for physicians. So when we speak about true own occupation coverage and the provisions of the policy, there's really only a handful of companies that are doing that in the way that they need to be.
Yeah, I think we talked about cost is based on age. The younger you are, the cheaper it is. And once you're able to lock that base cost in, that is locked in for the life of the policy, and it will not increase as long as you meet your side of the contract, which is to continue to pay your premiums.
Absolutely. And we'll talk a little bit more about this in detail later, but there's special concessions for residents and medical students. So basically what that means is that you have the ability to purchase coverage while you're in training that you might not have the ability to do when you're in attending. We talk about the importance of beginning this coverage early, and we'll talk a little more about that in detail. But at the end of the day, we want to get this coverage, we want to lock it in, we want to take advantage of those concessions when they're available to us. Rick, do you want to talk about this?
Yeah, so this we're going to spend a little bit of time here, and this is kind of a key component when we're talking about physicians, especially residents that are transitioning from a student into resident and then resident into attending. The biggest myth that we run into from a lot of our physicians is, oh, I'm covered, I'm taken care of, I have my group coverage that is given to me through my hospital, which is as I said, a myth. That coverage is there, and it is coverage that's most of the time given to you or given to you as a benefit, and you don't have to pay very much for it. But when we go down this list, you'll see that the majority of times, and I'd say it's 90-95+% of the time, your group coverage is not adequate enough for the physician's needs when we sit down and do the full analysis. The vast majority of group disability plans are what we call basic protection. Most of the time, if you're going to be graduating and going into a residency program, pretty much across the board, all of the teaching hospitals here in Massachusetts have what we call the 60% of income up to $10,000 a month of coverage. So if you make $50,000, you take your $50,000, you times that by 60%, you divide that by 12, and that gives you about $2,500 a month of coverage. Most of you are going to make more than $2,500 a month, and as you can see as we go down here, we're going to explain that that $2,500 a month actually becomes even less than that. So that's kind of the first piece. The second piece is this is group coverage that you as the physician don't own. It is your coverage while you're an employee or part of that group. As soon as you leave that group, you leave that coverage behind. If you go somewhere else that has a group coverage, you'll be able to pick theirs up, but you don't have control over that. You don't own it. You can't, most of the time, take it with you, or if there are conversion provisions in there for you to be able to take it with you, the vast majority of what we've seen is that it converts not at the good own occupation coverage or the full benefit coverage. It's a lesser policy that you're able to convert with you. A lot of times the coverages, and again, these will vary hospital to hospital, and it all depends on the type of plan, but they'll have contractual limitations in them, which means it either won't be the full own occupation coverage, or it won't have the full list of riders that we talked about with regard to the cost of living or the catastrophic or the future purchase options. And purely by the fact that you don't own it, that lends us to the fact that it may be modified or canceled. If the hospital decides that, this is too expensive of a benefit and we're giving it to our employees and we don't want to do that anymore because maybe we're trying to cut back some costs, that can be canceled at any time. It can be modified. It can be changed on you at any time. You don't have control over that because it's not your policy. It's part of a group that you're just employed by. With most employer group benefit plans, if it is given to you as a benefit, the benefit is taxable. And we now go back to my example, that $2,500 a month now may come down to $1,800 or $1,900 a month of actual cash in your pocket when you're used to taking home $3,300 a month while you are actually working. Most of my residents don't have the ability to drop their income by $1,500, $1,600 a month and still make ends meet. So that's a really important, component of the grant is it's nice and it's there and it's given to you, but it isn't adequate enough to fully satisfy your needs.
Correct. And then lastly, the pre-existing condition clauses. Nearly all group coverages, if you're dealing with some type of medical issue and you enter that disability plan, there's usually a period of time, sometimes 12 months, 24 months, where if you had a disability because of that pre-existing condition, then they wouldn't go ahead and pay claims. The other big piece of this is that the group coverage is only good as long as you're employed at that hospital. As soon as you leave that hospital, that coverage goes away. So again, you can see the potential issues there if there's a pre-existing condition entering in the new plan, or let's say you were to go into private practice, there might not be a plan at all. So that really then brings us to individual coverage, which is really our recommendation that everybody own an individual disability policy. There's a fixed benefit, so essentially everybody's able to get at least $5,000 of coverage. So when we spoke earlier about concessions as being a resident medical student, you're able to get that $5,000 of benefit. So back to Rich's example, that kind of throws out the window that percentage of income. And basically what's happening from the insurance company's perspective is they're saying, we know that the trajectory of a physician is for their income to go higher. We also know that should they experience a disability, that their goal is going to be to get back on track because they're going to earn a heck of a lot more money in their career, and they're probably not going to stop their training for $50,000 a year. So but the bottom line is that there's a fixed benefit. It isn't connected to any percentage of income. It's your benefit that you then own, that you can take with you. It's completely portable, so if you go to different practices, different hospitals, that benefit is always coming with you along the way. It's fully customizable, and what we mean by that is that we have artistic license in how we design these policies. So someone that doesn't necessarily understand sort of a physician's universe and what's important to them may or may not design these policies correctly because we do have, again, in terms of how we add these provisions, the cost of living that Rich mentioned earlier, we have, again, some artistic license in how we design these policies. That non-cancelable and guaranteed renewable piece can't be modified or canceled. The rates are guaranteed. The benefits are tax-free because you're paying for it. And here's probably the most important part of individual coverage is that you can protect your post-training salary while you're in training. And basically what I mean by that is that you have the guaranteed ability on these policies, as long as your health is approved when you're first applying for the coverage, you have the ability when your income increases on a guaranteed basis to be able to increase your coverage to that new amount that reflects your current income. And we can't stress the importance of this because probably the biggest risk we have to any of these types of insurances is that something changes with our health. So by being able to lock that coverage in, we're protecting against that potential concern down the road to make sure that no matter what happens as our income increases, we have the ability to increase our coverage.
Yeah, and that's huge. I mean, the individual coverage is always going to be able to be layered on top of your group coverage, right? So as long as you have the individual coverage in place first, no matter where you go, you'll still be able to get whatever group coverage they're offering to you from that group, even if you have the individual in place. The reverse is not always true. So if you don't have individual in place first and you go and you get group coverage but it's not adequate, you're going to be limited on the amount of individual coverage that you can get. And the increase piece is a huge component of that. One of the things that we see a ton these days, and we've seen over the last 10 or 12 years, is a lot of folks that were hospital employees were outsourced. The hospital outsourced the radiology department or the surgical department or the ER department, and now they're their own employees, and they lost all those group benefits that they had as a hospital employee. Well, when a whole radiology department goes out and gets outsourced, the younger docs that can still qualify for it are fine, but you have 55-year-old docs that basically say, you know what, Rich, I've had coverage all the time. I got 3 kids about ready to go to college. I need this coverage. I just lost mine. Can I get some coverage? And I'm like, sure, doc, perfect. Like any medical issues. And he's like, yeah, I'm on Lipitor for high cholesterol. I've had 2 shoulder surgeries. I'm about 20 pounds overweight. And I turn to him and say, doc, there's not an insurance company that's going to touch you right now. But if they had their own individual coverage that supplemented their group, that same doc turns to me and says, Rich, I lost my group coverage. I want to increase my coverage. And I say, sure, doc, just show me your tax return. Because you've already locked in all of your health. And it doesn't matter that he's on Lipitor with 2 shoulder surgeries, because you've already taken care of all of that and gotten that out of the way. You can increase your coverage at any point in time.
Yeah, so the larger point with this is that our blanket recommendation to our clients is that they want to purchase this coverage as early as possible. That guarantees them the lowest rate, but it also guarantees them that once they've qualified for it, that no future health issues or concerns are going to impact their situation. So again, that really is our blanket recommendation. So again, we talked about protecting our post-residency salaries now. We talked about hospital-provided group coverage isn't adequate. We talked about true ONOC language versus modified ONOC. So to speak about that real quick, so some physicians would say, you know what, could I save a little bit more money if in the event of disability, I didn't have that ability to double dip? And what I mean by that is what Rich mentioned earlier about true own occupation coverage is if you can't do your specialty, but you could go off and practice another specialty or even another job, you're able to collect on your disability plus the income of that new job. What modifying own occupation means is that it's your choice if you want to work, meaning you don't have to. If you're disabled in your specialty, then you're disabled and the insurance company is going to pay you your disability claim. But if you choose to go off and work somewhere different, they're going to offset that amount. So an easy example is if you're making $100,000 a year before disability and then you become disabled and you're making $50,000 a year, they're going to give you half of your disability benefit in that situation. So it just means they're going to offset for that. Why we talk about based on specialty, somebody who's procedural, surgeon, radiologist, anesthesiologist, well, some radiologists, but those are situations that if you can't do that specialty, sorry, let me take a step back. It's very easy to disable you from that specialty. Again, if a surgeon hurts a tendon in their wrist, that could potentially put them out of business. You could argue that sort of more of an internal medicine doctor, somebody, in primary care, that it's going to take a lot more to disable them. And so that the number of instances that would actually apply would be fewer. So some people say, hey, if I can save a little bit of money, then is it worth doing that? The reality of what we're seeing now is many of these policies, you might inherently have the true own occupation definition and you're not actually saving anything. But we just want to throw that out there that in some situations that modified own occupation is actually fine. But again, the blanket rule for most physicians is that they're looking for that true own occupation coverage. So the last piece here is that discounted options are available. So through our firm, we work with pretty much every hospital in town and lots of others, as well as a number of the residency programs and so forth and other places. But the bottom line is that we're able to secure, because of the relationships that we have, coverage for our clients at a significantly discounted rate compared to what they would get on their own individually. So Rich, I'll let you talk about this.
Yeah, so basically what we've been able to do with the years that we've been working with that is be able to negotiate some proprietary discounted programs. And really what comes down to it is for any of the female physicians that are on the call here, this is where you want to make sure that you're listening up. So a female physician in the same specialty is 40% more expensive than her male counterpart, simply because of pregnancies and complications with pregnancies. The insurance companies, and this is all of them that work with the medical marketplace, the handful that Troy was talking about, all treat it the exact same way. Females are more expensive than males for someone that's the same age and the same specialty. What we're able to do under our discounted programs is get the females and males down to what's called a unisex rate, which brings the female down to the male rate and then gives an additional discount from there. So we just kind of chose some ages here, and if you look at a 28, 30, or 32-year-old, what the female rate is versus the discounted rate, you can see the savings is tremendous. This is a no-brainer from a financial decision to be able to lock in your discounted coverage while you are still part of one of the programs that we have, which is basically, Tufts or any of the major medical hospitals here in Boston. We do have some all around the country as well, but that, it's a guaranteed here to be able to lock that in, because once you have that discount on your policy, that is yours and you own it. Again, it's guaranteed non-cancelable, that rate is locked in, and you keep that discounted rate on all your future increases as well, which is a tremendous amount of savings when you think about how long you may hold this policy.
So in working with Tufts and other medical schools, what we've essentially worked out is that, again, if people apply for this coverage while they're still associated with that institution, we can extend that discount. So even if people are, going all around the country and so forth, which we know they're going to be, we can still help them secure that discount. Anything else that you'd add here, Rich?
Yep.
So, bottom line, we've talked about this already, but, at the end of the day, this is really all about our health. So if we can qualify for this coverage when we're as young and as healthy as possible, it really secures us for the long run, and also the premiums are going to be much less costly over the course of our professional lives and having this coverage in place. So what do we do now? What's sort of our recommendation for action steps? Actually, you know what? I'm sorry. I wanted to speak to one other item here. So there is a program. Kara asked us to speak about this when she asked us to put together this webinar. So there is an opportunity through Tufts that allows you to secure disability coverage, and it allows you to do it without any medical underwriting. So really what we suggest for programs like this, and you're going to see these out there throughout your career, you'll see them with your associations from time to time, where basically what they'll do is if they're going to a large sample of physicians, then they can offer some concessions. The problem is when this happens is that something has to give in terms of the contractual language that they use, the additional provisions and the coverage. But from a positive standpoint, if somebody does have a medical condition, then they'll give you this coverage regardless. They don't ask any medical questions. So really where we suggest using this coverage are for those people that aren't able to go through the typical individual channel, or they've tried to go through the typical individual channel and they weren't able to secure coverage. So just to point out a couple of those things. So we had mentioned that through individual channels, everybody's able to get $5,000 a month of coverage. Through this coverage, it's $2,500 a month. We also talked about cost of living and the residual benefits. These coverages generally don't offer the cost of living. The residual is oftentimes watered down. The other big piece is that additional purchase option to be able to get more coverage in the future. This allows you $7,500 a month, where many of the individual carriers will offer $15,000, $16,000, $17,000 a month on a guaranteed basis. So again, it's the coverage itself is okay. But again, where we suggest it is for people who aren't able to get coverage on their own. If you are healthy and are able to go through the underwriting process, what you're able to get on your own is much more advantageous. So again, we just wanted to throw that out there, and Kara asked us to speak. Kara from the Financial Aid Office asked us to speak to that. So, in terms of what's the next step when we're thinking about our disability insurance, we discuss review programs and the discounts that are available. So again, the program that I just mentioned, and as Rich and I mentioned, we're happy to talk about the different discount options that are available to you as Tufts students. We believe that it's smart to review multiple carriers. As you look at different specialties, different carriers do better than others in terms of the cost. So again, some carriers we're going to go to for the surgeons, other carriers we might go for primary care physicians. And again, we like to run all of those so that you can get a sense of how they stack up. And it really is amazing when you do that of how different the premiums can be. So another piece there is that we don't suggest going to the providers that only work with one company. So, a representative from a certain company is only going to show you what they have through their company. That may or may not be in your best interest. And again, you might be surprised at the difference in premiums when you're looking at multiple carriers. Our blanket recommendation is that we maximize the individual coverage available to you. The problem with disability forever is that you're never going to be able to get. Let me take a step back. With this point in your career withstanding, you're never going to be able to insure all of your income. It's only going to be a percentage of your income. So our suggestion is that we maximize individual coverage that we're able to get. Again, as we've spoken, we want to secure coverage while we're young and healthy at the lowest possible price. and we want to protect our future insurability. We don't want to wait until it's too late. Nobody expects to get sick or have a medical issue, but unfortunately, as Rich mentioned earlier, it is something that we see quite commonly, and we have a number of people in our systems who would pay us anything to get these types of coverages that just aren't able to get it. So it's that experience that causes us to have the passion that we do about talking to our clients about just get this stuff in place, get it over with, and just kind of check it off the list. Rich, anything else that you'd add here?
No, that's great. I mean, it is something that what we've seen, and you're going to go through. It's nothing that you probably haven't heard of before. Residency can be a difficult road for you guys, and it's a tough trek, and you work a lot of long hours, and there's a lot of physical demand on you. What we've seen is that the decline rate for a final year resident or fellow is significantly higher than it is for a first year resident. So experience has showed us that what you're about to embark on may potentially have some negative impact on your ability to get coverage.
Well, and the other part of this is even with medical, electronic medical records coming on board now, is that doctors are asking more questions. There's more things in their medical records, and a lot of what these companies are making their decision on is what the physicians have said in their medical records. So again, we just say get the stuff in place early, check it off the list. If you're a physician, it really is a must-have. The other thing that I'll say is it's not an easy decision. A lot of us, you're at a point in your career where you might not necessarily have a lot of income. And I apologize that you're at a point in your career where you have the least amount of income, that you have to start making these more longer-term decisions. But again, our experience is we just don't want to wait, because we've run into too many people who would do anything to get this coverage and just aren't able to get it. Whoops. So essentially what the last part of the slide said there was, oh, here it is, sorry. If you would, there's an evaluation as soon as I end this webinar that will pop up. If I could trouble you to fill that out, that would be great. We want to make sure that we're providing the resources that you want to be learning about. And let me say that again as well, is that we've been working with Tufts for a very long time, and we've really provided ourselves as being resources for them. So if there's anything that we can do, if you have questions, we don't charge to have a consultation. So if there's anything that we can do, if there's anything that you'd like to discuss further, we're certainly happy to do that. And at the end in the evaluation, there is a spot to request a one-on-one meeting with Rich or I as well. So we're happy to do that if that's something that would add value to you.
And we can also open it up now if people have questions. If they want to raise their hand, we can unmute you, or if you want to type a question, we can do that.
Yep. Any questions?
All right.
There's a picture of a little hand there if anybody has questions that... All right. Well, good. Well, anything that we can do, please let us know. Otherwise, it was great chatting with you this evening, and good luck. I know you have an exciting next few months ahead of you, and we wish you all the best of luck. Have a great evening.
Appreciate your time.